the last week, yes, but certainly across the board, Saudi Arabia and Russia coming to an agreement in terms there as well, that sets a different agenda to OPEC, surely.
It does set a different agenda to OPEC, and we've been calling it OPEC Plus for a while. So Russia, is keenly allied. While it's not formally part of the OPEC nations, it is in Russia's interests, in OPEC's interest as well, for them to make an alliance. But this is a cartel structure. So when you look at cartel economics, it comes down to essentially game theory, where once the oil prices do move up high enough, there's all sorts of incentives for people to break the deal, to leave the cartel structure, to leave as we've seen Qatar leave, but it also brings in a lot of outside competition, which is part of the reason that we've seen such a ramp up in US production over the last, say, 10, 15 years. When we had oil above $150 a barrel, this was a keen focus for the US to explore different means of production, and that's where we saw the entrance of the likes of shale. So since shale entered, it's added it's just over 7 million at least barrels per day to global oil supply. So it's starting to be almost as significant as Saudi Arabia. Now, if you look at, I suppose, also the nature and structure of cartels over time, it is a very unstable economic structure in that they often break down. So if you look through the history of commodity cartels, you go back to like the tin cartels and coffee cartels and all the other ways, the majority of them do eventually break down. OPEC has almost been in the exception in this case, where it has run for far longer than traditional mechanics would suggest.
What's kept them together then? What's kept them together for
Essentially, it has been Saudi Arabia. Because Saudi Arabia is such a large chunk of it, Saudi Arabia can dominate the policy, and it's because those other countries are actually smaller producers that it doesn't really rely on the agreement. Saudi Arabia is the one that essentially has the power to curtail production and manipulate the price. Now, you mentioned in your opening that Saudi Arabia not necessarily the biggest producer. You look at the amount of barrels produced by the US and China, it's significant. I think the key difference there is that the US and China have that kind of demand for energy as well. So they're essentially using their own oil, where Saudi Arabia ends and the OPEC nations end up as oil exporters, and because they're oil exporters, they can kind of be almost the swing vote in the pricing as well. So the problem is that over the last little bit, shale really has become an important technology, and on top of shale being an important supply-driven technology, you've also seen improvements in the demand side of the equation as well. And this is the likes of electric cars from Tesla. It's a change in the way that petrol engines use fuel as well, petrol and diesel engines, that they are becoming more and more efficient. So if you look at it since about 2000, we've actually reduced the requirement for petrol by about 4.4 million barrels per day. So we're actually seeing the demand side of the oil equation subsiding, and not necessarily because economic growth is subsiding, but rather because the technologies that we use to create transport and logistics have just become that much better. So it is a very dynamic market at the moment.
Where does OPEC go to from here? Does it remain, as you said, yes, cartels break down. Are we beginning to get to a point where this might break down? Qatar leaving is perhaps symbolic. It's not necessarily the biggest player. Nobody will mind too much. They'll move to a 14-member OPEC set, but that won't change too much in terms of production. But it does symbolize a little bit for them, doesn't it? Is this the beginning of the end?
I think people have been calling the beginning of the end for a while on OPEC, and the reason for that is that it is not a traditional cartel. I think the difference between Qatar and the rest of the other smaller nation states is that Qatar has a far more diversified economy than many of the other
because they're going to focus on shale as well.
They've also got big LNG production as well. And essentially the problem with a lot of the oil producing nations is it almost becomes a case of what economists call Dutch disease, where their currencies appreciate because they're exporting so much in oil that it doesn't give a chance for their manufacturing and other sectors to grow and be created. That's a very, very difficult position to put these nations in, and that's almost, I suppose, also acting as an adhesive to keep the cartel together, because if you look at the likes of Iran and the Emirates and other nations around, even to an extent the Venezuelas, they are so reliant on that higher oil price that it is, while they have very limited power on their own to curtail production and change the market, they have to almost do Saudi Arabia's bidding in order for Saudi to take the knock on them and increase prices. So I think to an extent it's been the beginning of the end for a while because of the changes in technology and because of the way that the US has explored shale production, and it's almost become that switch, because shale is also very different from the kind of investments that you need in the traditional oil production, in that you can turn shale production on and off almost overnight. So it's become this card that the US can play whenever oil prices get too high. We're going to bring shale production back online, and that almost, it creates a natural market environment where prices are more suppressed. So I think the days of seeing, the OPEC cartel having the power to lift oil above $100 a barrel, I think those days are gone. And we're going to see much, much lower oil prices for longer, not necessarily the $30 a barrel that we saw a little while ago. That seems very abnormal. I think even now, at around 60, 62, 63 on Brent, that is fairly low. And I think part of that was almost political wrangling from the US administration to suppress prices. So that also might be temporary. But again, the idea of oil getting back to $150 a barrel, it's not the same environment it was when that was possible.
Gary, let me quickly close off on the market picture. However, pretty negative across the board as we've spoken. FTSE, the JSE down 1.5%. The Rand even going to 14.21. Not a great picture across the board there.
Not a great picture, and it's largely economic data that's driving it. So we had non-farm payrolls out on Friday. It was a miss in the US, which technically should be good for our currency because it should flatten the expectation that the Fed is going to be hiking rates anytime soon. That said, I think everyone's looking at the beige book that came out earlier in the week as well, just saying that the US labor market is still very, very tight, and that many companies are struggling to find employees to actually fill job openings. So even with the miss on a single number, people are still looking at it and saying this
they should take some of ours. We certainly need it. Look, our jobs numbers come out tomorrow.
We have enough. And then I think the only other thing that's really pushing markets today as well is also there was a miss on Chinese trade numbers over the weekend, which everyone was kind of expecting the rise and the fears around tariffs and the trade war to affect things. But the trade numbers were very weak between China and Europe, which is, again, it's just concerns about the mechanics of what's happening in Europe at the moment.
Gary, appreciate your time. But Gary Boyson there, portfolio manager at Rand Swiss. Unpacking that market picture, of course. As I said, that oil story will be quite interesting. OPEC in itself, is it indeed the beginning of the end? We will soon find out, of course, and we'll bring that to you right here on SABC.